Welcome back. You're joining us on this edition of Lunch Money here on Business Television India. We're putting the focus on the retail space and this particular stock in focus. Avenue Supermarts that owns D-Mart, and that's the stock that brokerages have on their radar. The company had an analyst meet only yesterday. It indicated positive growth for the company going ahead from here, and the counter has also surpassed 1 lakh crore rupee market cap. But now the question is, what lies ahead for a stock like D-Mart? Let's find out from Himanshu Nayyar. He's consumer and agri-analyst at Systematix Shares, and he's joining us on the phone line. Good afternoon, Himanshu. Hope you're doing well, and I want to ask you what you think the entire retail space, the organized retail sector holds, with particular focus on D-Mart. The key takeaways that you got from that analyst conference that Avenue Supermart organized only yesterday.
Yeah, hi. Thanks for having me on the show. So yesterday, a lot of focus was there on explaining the longer-term opportunity in modern retail, which is a $600 billion plus market, and expected to reach $900 billion by 2020. And the company explained that modern retail penetration, especially in grocery retail, is less than 5%. So there is a lot of headroom to grow. It's only about execution. If you execute well, you can keep on growing at north of 25-30%, which the company gave a lot of confidence that they are looking to grow at that rate.
So, Himanshu, let me in fact take that thought a little bit forward, because we've been talking about store sales growth, and we've seen how D-Mart Ready is really ramping up operations. So how do you feel outlook is actually going to be looking, and how much higher do you think we can really go, if you were to sort of specify the pace at which things are being done as well as your expectations?
So D-Mart Ready, that's still in a testing phase. They have only about 59 outlets. They are still experimenting with that model. So I'll not focus too much on that. But otherwise, if you look at their the store opening trajectory this year, last year they've opened 24 stores, and they are still not happy with that. So they are looking to up the pace and maybe open closer to 30 stores every year, or more than 30 stores every year going forward. They've identified a couple of new clusters. They've entered markets like Rajasthan, NCR, and Punjab, where there could be more store openings, and they obviously want to strengthen their presence in their current states of Maharashtra, Gujarat, Karnataka, Telangana, and Andhra Pradesh. So if you look at their SSG numbers, they have been declining for the last 4 to 5 years. They can decline some more for two basic reasons. One being the fact that they are opening more and more stores in the same vicinities, which is impacting the other store. And the second reason is the base of their sales throughput, or the sales per square feet, which they measure, has increased quite significantly over the last few years. So they are starting from a very high base, and therefore on that base a very high SSG is not possible. So what we are building in is, going forward, about a 10% improvement in sales per square feet for the next 2-3 years, which gives a revenue growth of 30% CAGR for the next 2 to 3 years.
Himanshu, what about margin expansion? How much headroom is there right now within that entire sector? And D-Mart, of course, being in the grocery space, competition is building up over there as well. It's not like, you wouldn't have competition biting at your feet. But given the management is sounding more than ready to pass on the incremental margins to customers, going by what was discussed yesterday, does it imply volume growth, that it could increase further because of the higher competitiveness that we are likely to see going ahead?
Yeah, that's correct. So management explained that they were also positively surprised by the sort of margin expansion they saw last year. They don't want to go beyond 15-16% on the gross margins, and around 8.5-9% on EBITDA margins. So they are seeing a continuous improvement in their sales mix in favor of general merchandise and apparel, which is pushing up their margins. But what they clearly stated is they don't want to go beyond these margin levels, and whatever further benefits they'll get in terms of better efficiencies or sales mix, etc., that will be passed on to the consumers, and they would retain their identity of the lowest cost retailer following their everyday low pricing strategy. So that gives us more confidence that they should be able to achieve double-digit SSGs at least for the next 2 to 3 years.
Himanshu, specifically, what's your take on the pace of store additions that we're witnessing, and also whether the management is actually trying to increase the proportion of leased stores versus own stores, given it really forms more of a basis for their strategy? Just give me a sense as to how you think that's going.
Correct. So on a base of 155 stores, which they had as of FY18, I'm expecting a store addition run rate of 27 stores this year and 30 stores next year, with a probability of the company outperforming on that front. And as far as the leasing model is concerned, they said that they are open to leasing as an option because it's a higher ROI. But the predominant model would still be ownership, because the company believes that the actual store is the biggest asset in the business. So they would still want to own that wherever possible, and they'll go for leasing only in areas where it's just impossible to buy a new store.
And what about new allied businesses, Himanshu? Did you get further insights on what Avenue Supermarts is planning by way of, perhaps adding a few more verticals in the same kind of business that they're in?
Not really. I mean, a lot of questions were asked on that, but the company, reiterated that they are happy with the way things are going. They don't want to experiment too much. They just want to do the same thing that they have been doing for so many years efficiently enough. The only experiment that they are doing is on the DMart Ready model, the pickup point model. They will obviously expand there, but other than that, I don't think they want to change something that is going so well for them.
Fair enough. Great to get your insights from that analyst meet that Avenue Supermarts has had, talking about expansion plans and strategy for DMart within the grocery space. And if you look at the retail sector, whether it's fashion or grocery or, just basic clothes, like V-Mart specializes with